Hi, I'm Trader Bubble. Welcome back to part 6 of the Ichimoku Cloud series. Part 1 to 5 is talking about the Tenkan, the Kijin, Senko Span A and B, and the Kumo, Chiku Span. So we're now talking today about entry techniques, the traditional entry techniques, and how you would exit a trade, and how you'd use stop loss. I'm not actually going to show you how I would enter a trade, but these are the sort of rules that you should follow if you are doing it correctly, the normal traditional way of doing it. So if you're bullish, if you are long, if you're buying spot, you want a bullish TK cross, Tenkan moving up through Kijin. You want the candles to close to be above cloud. Doesn't have to be, but if the kind of hard fast rule is candle close above cloud. Chiku, you want it to be above price. That's very important. And you want a bullish cloud or a Kumo twist. Again, that's a bit subjective. I'll show you when I go through examples why I'm saying that. If you are short, if you're bearish, if you're selling, you want the opposite. You want a bearish TK cross, Tenkan moving down through Kijin. You want the candle close to be below cloud. Again, I'll show you that later on. Kumo, you want that to be below price. That's an important factor. And you want a red cloud, a bearish cloud, a bearish Kumo twist. Exit strategies, when Chico enters price, that's a massive warning flag for me. It can continue, the trend can continue. However, I would definitely be taking a chunk off my trade when Chico enters price. You're looking for a bearish or bullish TK cross, depending on if you're long or short. Price to be above or below Kijin. And price enters cloud. There's a few different methods. You can take one of them. You can take all four. You can take 25%, 25% off each one, or you can work out your own sort of strategy there. Stop loss usually below Kijin. However, very much market dependent. You have to kind of use some sort of technical analysis to work out where you are going to put your stop loss. But when you are trending strongly, Kijin is a good example. So let's get rid of that. I've done loads of examples. Whether I turn these off at some point, I'm not sure if it's overwhelming. And we'll go back to a decent time. This is the perfect trade example, which I indicated a few times during my other lectures or training sessions, not so much lectures. If we go back to the COVID crash, is a decent one to show you how Chico shows you before things actually happen. So if we run through the chart, I'll basically just talk through what I'm seeing. I might miss some things because I don't want to be here all day. But what we've got at the moment is cloud closing up, candle closing above cloud, bullish. Chico above price, bullish. You have a bearish cloud, however price is above cloud. So you'd be 80% bullish here at this point, maybe more. I'll speed this up if it's too slow. So again, everything's pointing up. So I won't mention this again, but what you want is candles to be pointing up. You've got a Kumo twist, bullish Kumo twist. You've got Kijin sitting on Senko Span B at 8.5 grand. You'll be looking for this. So this is looking for a mean inversion. So if you're not long, you'd be looking for a long from 8.5 grand, unless price closed below and Chico is below price. But again, we'll say what we see when we go through. So you can see Chico is starting to come towards price, and you see at this point here, Chico goes Chico goes through price, a warning sign. It doesn't mean exit straight away. Especially when you've got a bullish cloud, you're still above cloud, but you'd be thinking in some sort of some sort of retracement, taking some off the table if you get a chance. But yeah, you'd be thinking at this point things aren't looking too promising. I need to be conservative. I'm not going too quickly, but you've now got a bearish TK cross. One candle back, you've got price closing below price. You've still got a bullish cloud. However, you've I mean, Chico was well under price. That's why I said Chico was very important. You could just use the Chico alone to out of a trade, 100%. And if it turns around again, you can exit. But so you've got one in sign A, one in sign B, and you had a huge dump. But that's why I said Ichimoku is such a strong tool. It tells you what's going to happen, or it gives you indications of what's going to happen before it happens. We're going to have some bearish action soon. You can see on my back-tested example. So this is an example of a mean reversion when price flushes through, or when massively oversold. Mean reversion. This is what you're looking for. And again, your Kijun is bang on your single span B. So this is happy price. Closed cloud. Lines are coming a bit more together. So this is where price is happy. And at this point, you've got a bullish cross. Let's close below. There we go. Close above cloud. Bullish sign. Your stop loss. Again, so this is an example where your stop loss would be. Your Kijun's pointing down. Your stop loss will be under here. So a lot of people can't handle a massive stop loss. 9%. But you need to trust the system, trust the indicator. And this is where you can start and move your stop loss up. So your stop loss will be following Kijun. You had a Kumo twist. Again, trust the indicator, trust the signal. Lines pointing up. Starting to... Chico is starting to play with price a little bit. Warning sign. Again, say if you want to use that, it's just a negative signal. Just use that. It's fine. Or you can wait to get stopped out by price, which you haven't yet if you're following the Kijun up. Mean reversion. Stop loss would probably, but if I was trading this, maybe under this swing here, so you'd be under here. Not sure if I'd get stopped out in the future. There you go, I'm probably stopped out here. So if I was trading it, I'd be stopped out. Buy my stop loss. Chico's in price. You know, you've got a bearish cross. However, bullish cloud, you're finding support off the cloud. What you don't want to do is close in here. So you got this is a good example of the cloud. You're getting this support off the cloud, and you have a trade signal when Chico closes above here. So this is your entry. Stop loss below. This is a tricky one. So what you've got here is you've got a big imbalance here. So if you were to put your stop loss below Kijun, you've got a big imbalance. You could easily wick through that because you've got a lack of liquidity in the zone. But follow the system. Stick your stop loss at 10.4. There you go. We're moving up a little bit. So Chico is moving in price. Warning A. Stopped out. So again, your Chico told you, or gave you foresight of what could happen, or give you a close trade before it actually happened again. I keep banging on about Chico, but I use it all the time, even in today's price where we are now. So you've got a bearish cross in cloud, choppy trading. I wouldn't be taking any trade at the moment in cloud. I'd wait for it to close. It hit Chico's single span B, gained support. So I'm talking and looking. So what have we got? Let me have a look. So you got candle close above cloud. Can't quite remember why I put this green. This is the zone where there's many chances or different ways of taking a long signal. you've got a bullish cloud. You've now closed above cloud on this signal, on this sign, this candle. I'm talking and looking. Where's Chico? Just want to see. Yeah, Chico's above. So you could enter here. Stop loss. I wouldn't necessarily put it under Keyshawn here because it's just to say you have to read the market. I'll probably stick it at the bottom of cloud. Again, if not sure, people can handle a big 9% swing, depending on what leverage you're playing with. But you've got a trader there. Let me just knock it forward a couple. You've got a bullish TK cross, close above cloud, still a bullish cloud, Chico above. You've got all the ticks you need at this point here, and we'll just play it and watch the beauty of the bull run from October 2020. So what I'm watching, again, cloud, angles of lines, Chico, stop loss, follow your stop loss, and you'd be to be clever where your stop loss. You've got a daily support here, you'd probably just put it on just under here. So don't forget, this is your mean reversion. You've got a C clamp. This is what's called as a C clamp, where basically your Tenkin's too far away from your Kijun. So if I was looking at this, I'd be expecting a mean reversion where I can compound position. Again, stop loss probably be about 14, but I'd be looking at compounding position here. So adding more to the position at about 15.5 with a stop loss at 14.8. Didn't get a compound there. Again, they're moving well in harmony at this point, especially at this point here. Starting to move through Tenkin. So Tenkin. That's your mean reversion. What I've been looking for a while. Sinker span B is flattening out. You have a support cloud if you do go through, or that is your sorry. Let's just clarify. If you were bearish, that's your magnet for price. So if you did suddenly have a bearish cross, that's your magnet for price. The other side of the cloud. This is your support, and this is your magnet. So you'd compounded your position at this point. My stop loss would have been under this swing point here. Again, and then follow the stop loss up. I've got this here because Chico went through price here, so you may have closed some position, but you'd probably added in straight back in when you had your mean reversion. Again, another mean reversion. So Chico is now moving through price. Again, that's a warning sign. You got your mean reversion at 45k, price is at 54, and your support here. So you would probably have your stop loss at about 42, 43k. See what happens. Moving your stop loss up. Excellent place to put your stop loss would be under here at the moment, about 46. So when your Kijun is getting closer and closer to price, I mean, you just inch up, you'd follow up. Chico's dancing through price too much. You've now had a big wick through. May or may not have got stopped out, depending on where you had to put your stop loss. So you may or may not have got stopped up here. However, you got a warning sign here. Chico's spending way too much time in price. I'll edge this forward step by step at this point. I think if you zoom in, you can kind of see. Let's get rid of the price. So that's where you had a bearish cross. If you weren't out at any of these points, you're looking to get out of any position at this point. you don't want to be closing in cloud. You closed in cloud here a little bit. You smash through it. This is your magnet for price. You want this to be flat, really. However, that's your magnet for price is 43k. Bearish. So you've got. So you're now bearish. So it's like if you were in a long, you'd certainly be in a short at this point with your bearish TK cross. I've already done that in the price there. So Chico is finding resistance in price. So you'll be closing your long position and entering a short position around about the 4th of May. And you'd still be short. So again, it works both ways. Long and short. That was your final get out of all your longs and look to enter shorts. Chico telling you again what's happening. So I'll keep playing it. Let's just flush through. Okay, a lot of examples. What I didn't say in too much detail is Chico likes to find resistance in price. Remember that for the future. And I'll just let it play out and see where we are today. Last video was 8 days ago when I recorded it. You can go through examples of yourself. Now you know how it's calculated. When we went through parts 1 to 5, you can see yourself. And let's just get to the. Are we near the end? Where are we? We're not a million miles away. Let's just stop it. Get to the end. So it is called a one-look indicator for a simple reason is you can now look at it. Bearish cloud. You're below Kijun. Chico's above price. So you can see bullish, bearish. You can kind of tick off if you're bullish or bearish on the different lines. There's a trade setup coming up which I'm going to record in part 7. I'm just waiting for it to actually confirm. But traditionally, if you look at it now, we are bearish. So I hope that helps. I hope I've not gone on for too long. Don't know how long I've gone for at the moment, but yeah, that's part 6. When we get a trade signal which is called an edge-to-edge trade, I will record that, and hopefully I'll record like the prequel and the sequel type thing to show you what happens and if that trade signal is a good trade. So yeah, that's part 6. Hopefully this helped with showing you how Ichimoku works, how you can backtest it using a replay tool or just manually going through it and plotting the 30 days back to see where price is, where Chico is, and where you're taking into Kijun is. So yeah, I'll stop talking. Part 6 done. See you on part 7. Thank you.